chat going.
Oh, all right.
All right, let's give the internet a minute to sync up here.
No worries. You're in charge.
All right, what do we got? We got 20 people in here. Wow, that's pretty good. All right, good afternoon, good evening, or good morning, depending on your perspective of the world, and welcome to another episode of the AI Circle, brought to you by the iFlip YouTube channel. My name is not Lee Gearhart. Your usual host, Lee, is, I believe, traveling right now. He might be in the air right now. He might be literally on a plane right now. So I am Aaron Yoon. I'm filling in for Lee Gearhart tonight, in case you didn't already know me. It's been a while since I've been on one of these. And joining me, of course, is none other than our Chief Investment Officer, Kelly Korshak. Welcome, Kelly.
Hello, Aaron. Actually, it's the Chief Information Officer, but it's kind of the same.
Oh, all right. Sorry. See, either way, the I is the same. I should have just gone with CIO. All right. So, good afternoon. No, we do have somebody that is a good morning here. Someone joining us from the other side of the planet, it seems. Welcome. Yes, and please feel free to engage with us in our conversation tonight in the chat. Okay. Here's the agenda for this evening or morning, depending on where you're from. I'm supposed to give a disclaimer first, but here's the agenda. I'll get to the disclaimer in a second. We're going to do a market update. Kelly's going to go over what's been going on since we last met in the markets. We're going to go over some of the recent trades that the AI has made, including a brand new smartfolio you may have noticed in your apps, Vector Plus. We'll wrap up with Q&A, and of course, the best question gets the winner. The best question wins a gift card from Amazon in the amount of $25. So we encourage you to engage with us in our conversation. But before we can do any of that stuff, I have to go through the fun stuff here, the disclaimer. So please bear with me as I read this. iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip portfolios that you select are suitable for your investment profile before trading in a live brokerage account. Now, with that out of the way, Kelly, I'm going to pass it over to you.
Thank you, Aaron.
Let us give us the market update.
Here you go, everyone. Well, again, everyone, welcome to another AI Circle, like Aaron already said, January 22nd of 2025. I've now already got the year right. I always make a mistake in January on what year it is, but somehow 2025 fits. Hopefully everybody can see my screen. I'm going to try to make these things a little bigger so it's easier to read. I'm going to do this market update, and then I'm going to go through, just like Aaron said, in the agenda for the day or for this evening. We're going to try to hold this to 30 to 35 minutes maximum tonight. I have a conversation coming up shortly right after this that I have to be on. Well, 2025 has started, and we all know that it was a little bit rocky at the beginning of the year. We made a little low, but now look at what happens after another. Just all it takes is 5 days. And the S&P, if it didn't hit a high today, it is touching it. It doesn't make any difference. The market over the first quarter or two still has this Trump effect. This is what we must call it. Which is the excitement of a new administration coming in and what it beholds to all of us as investors. That being said, the last 2 years were really spectacular years for the S&P 500. Each year was up 20 plus, which is amazing in and of itself. I mean, yes, 2022 was a down year of about 20%, but 22 back-to-back 20+% years is definitely a good omen. And we only look at the S&P 500. Yes, there are other indices, the Dow and the NASDAQ. They've done differently respectively, but the S&P is what matters because, as you know, and you've heard me say a million times, or at least 100 times, that it's the S&P that matters, and that's the benchmark we look for. I'll start with pointing out that if we look at the S&P 500, as you can see, with no volume really today, the market, again, gapped higher, traded in a very tight range, and made essentially a new high. The NASDAQ, on the other hand, just off of its all-time highs from literally the middle of December. A month later, we're still there. And if we look at the Dow Jones, kind of the same. A month ago, we were at our highs, but we're not quite there, but we could be there pretty easily. The Dow Jones last year, just note, was up just over 10%. It didn't have the year the S&P had. But remember, that index doesn't make as much sense anymore. It's only 30 stocks, and it's driven spectacularly by Apple and other stocks that are in there, and it just moves around with a few stocks. Over here, we got to look at the bond market, though. Let's take a look. As you know, the interest rates have been going up literally since the end of the third quarter of 2024, and now the whole fourth quarter of 2024 was much higher interest rates. As a matter of fact, we peaked at about 4.86 on the 10-year note, this is the price of the futures contracts that traded. This is the best way for us to keep an eye on interest rates. Recently, the interest rates have backed down from 4.80 to 4.56. So we're approximately 30 basis points off the low, which is this low here to high here, in an inverse relationship, as you know, between bonds and price, the yields and price. The other thing that's noted is the VIX. We should always look at this. The VIX is essentially sitting at its lows again, down here at 13. Every time the VIX gets here and below, you see these spike ups. These spike ups invariably are when the market corrects a little bit. The greater the correction, the larger the VIX run up will be. But as you can see, the trend for this is every time the VIX shows up, you might as well sell the VIX, which means every time the market dips, you might as well buy it. That will work until it doesn't, and we all understand what that means, I hope, which means the market will go up until there is some compelling reason for the market to go lower. And right now, folks, very few times in my career, I really can't see it. That doesn't mean I don't look for the contrarian argument, but I just don't see it. There's just an incredible amount of optimism out there. And what I suspect is, again, this continuing melt up. We saw literally in the first few days of this new administration, literally $500 billion of money can come in from one of the best investors of all time. That's the owner's son, the owner of SoftBank, who's going to bring in literally $500 billion, and that's just one guy. So it seems like the administration we have now is literally business orientated. It looks like Trump wants to run America like it was a business, and he's going to look to use his leverage and negotiating skills to make money for the country. And that's kind of a unique concept, but it certainly will make America rich again. Great is a different question, but rich again is a level of greatness, and there's no denying that. Let's move on. Right here, I think you guys should be able to see, these are essentially the Magnificent Seven stocks. Well, they're all up today, as you would expect. One of them, of course, Netflix, literally blew higher today. I remember it was up about 112 at one time early this morning. All of these stocks kind of settled on their lows, but the Mag 7 had a great move. I am not a big believer of the Mag 7 this year, believe it or not. I feel there's other things that we can own And I'll talk to that soon in that regards, Vector Plus, the new portfolio. There is a couple of interesting notes inside the Mag 7. Look at Apple. Apple has a correction now from a $40 correction from around 260 to 220. That's a $40 off of 260. That's a 15% correction. This is a 200-day moving average. We are still, I believe, in Apple, but I can tell you we are very close to saying Apple is not going to be an owner. If I'm a trader, I would be buying Apple here and risking this 200-day moving average. That being said, if we look at the other stocks, Google's on its high, Meta, as we saw, it's on its high, Amazon on its high, Microsoft, I don't like it, but it went up 4% in a day. Okay. Nvidia, again, a huge move again today, $6. It was just the other day, it was 130. I mean, it was not even a week ago. I'm an owner of the stock. It could still go higher, but don't look for the returns we saw over the last couple of years. Mag 7 is there can never be an argument to own it. It's just that I feel it's rich at this point, and I would expect some kind of correction in the first quarter. So far, we haven't seen it. The oil stocks we'll get to real quick. Oil has rallied, but this was partly the results of the election, the time of year, the holidays, travel, the issues with the Middle East. They're all conglomerated, but we moved from 68 to literally 80. We're backing off now to 75. But let's go to the stocks that I've talked about incessantly over the last year and a half. And you know what they are. They're Energy Transfer and Plains All American. Years ago, when we put these on in the red oil portfolio, and they also exist in the conservative portfolio in a very heavy weighting, the bet was always that the energy concepts of the last administration were frankly ridiculous, and they tried to move the country too quickly and too without really a deep enough thought into it towards electric energy and that in green energy, and that really didn't work. And the world knew better that, wait a minute, presidencies change. It was all by presidential edict and nothing through Congress, which means that these things could be upended. That's why over the last couple of years, or actually the last 4 years, these things have ground higher ever since COVID. This is COVID back here. We were a buyer here. Red oil was created here, COVID. We've been an owner literally from $6 and $7 a share all the way till now. The price forecast for me over a year and a half ago was $24 a share each. The analysts have finally agreed with me, and now we're pointing the same profit objectives of 24. That being said, I actually believe that the actual profit objective now, given that we have a Trump administration, which was our hope, that if the Biden administration remained, we would still go higher because there is folly in the Green New Deal in terms of what that really means to the prices of energy and inflation in general. Inflation cannot go forever. That's why these pipelines just kept going up. My new target here is literally been moved to 24 to more around the lines of $30 a share for Energy Transfer. And again, a very similar amount or even higher amount for All Plains American. And that is not unreasonable to think, given that these things had these kind of highs before COVID. And now that we know we're going to drill, baby, drill, we can expect even greater price appreciation from these stocks going forward. And we're starting to see it now. As you see, we are now making bigger moves. And as you can see by this chart, look at the movement. It's literally in a week, we have gone, in about 2 weeks, we've gone from 1670 area to 2070 earlier today. $4 on a $16 stock. That's 25% in 2 weeks. And we own these shares in mass, as you know, if you own the conservative portfolio and the red oil portfolio. And that has been kind of the mainstay of those investment portfolios. And it's not that we're right. It's just that we're both right on the call of being long energy stocks and the transportation of energy, but we're also right in the sense that politically, the best decision was to own these things, knowing that regardless of administration, they really had to go up. And now that we know where they're going and we know what the mandate is from the new administration, these are just go higher. Don't forget, folks, each of these things still are maintaining dividends that are now 7%. Why 7? Because the price has gone up so much that the yield ends up going lower. I think another interesting contrast I'm going to show you briefly, and we'll move on because it doesn't take much to get through 15, 20 minutes of talking about markets. If you look here, I follow the banks and I follow these oddball stocks. If you look here in the market, notice that the stocks I follow are mostly down today. Notice that. I mean, there's a few winners in there, but they're mostly down. These were actually, a lot of these stocks are in the vector portfolio. The reason is the vector portfolio, we'll talk about that a little bit right here. The vector portfolio represents essentially what we think the vector will be with the new administration. This new administration carries a very good majority in the Senate and a very slim majority in Congress. However, given the momentum we have, it seems to me that a lot of bills will be passed on the behalf of the Republicans that will support the things that we feel Vector will do well in. What is Vector? Vector owns things that belong to data centers, energy, certain kinds of transportation, minerals. Why do we want these things? Vector is representing a manifestation of what we have heard the new president, now the new President Trump, say that what he wants to do. He wants to have more data centers. Well, we saw $500 million over the next 4 years come in from Matsumoto's son. That was unexpected. So the one stock that that will do well in a situation like that is something called Digital Realty Trust. Digital Realty Trust is a company that essentially makes data centers. So they're the company you go to for construction, politics of it, electricity for them, all of the water for cooling, things like we care about that will make a difference if we build more data centers in this country over the next 4 years. And now we know that there is a mandate for that. The other thing it is the land companies that you build these data centers on. Now, it may or may not be companies like this one, LandBridge. LandBridge is a company that came to me from a dear friend, if she's listening, and gave me a clue to investigate this stock, which I did erroneously at first, but I figured it out quick enough. LandBridge is a company that owns land all around the country, a great deal of it in Texas, where they will be building a lot of data centers for obvious reasons, a lot of land in Texas, and a lot of good tech situations statewide. So these are companies that essentially are land REITs. They make money because they have a lot of land and people want to drill on that land. They want to put a pipeline over that land. They want to build a data center on that land. Oh, they want to mine for a mineral on that land. Where do you go? You got to go to the landholder. We really believe in these kind of companies. These companies are not paying dividends, which makes them growth orientated. This one's a brand new one. Another similar stock is this one here, Texas Pacific Land. Had a major correction after a huge run up. It was one of the best performing stocks of 2024 until the late December sell-off. However, it's recovered over half of that already. I suspect Texas Pacific Land will make new highs sometime in 2025 and way beyond. So these are companies I really like. Companies that I've kind of have a little less optimism for that will be we're going to trim down a little further. We still own them because of their dividends, but are going to be companies like AT&T and also Verizon. They've had corrections. They pay dividends. We had a run in them that worked for a while, but it has started to fail, and we feel the science no longer is valid here. So I suspect that The science will take us out of some of these stocks, which means the AI. On the other hand, it would probably be well to reduce these things a little further in terms of allocation, if not rid them completely from the portfolio, because there are other things that we can own. Finally, Aaron, before we get into Q&A, I want to tell everybody, we must look at Bitcoin. I'll go right to the Bitcoin chart because it makes it easier to look at it through the price of Bitcoin. Well, in the last AI circle, we already made the jump to over 100,000. We're still there. And now we're waffling around between 90,000 and about 105, 106,000. We're right there now, 104,700. If any particular graph or chart I've ever seen wants to go higher, it's this one. It is a chart that really has no comparison when you move literally inside of a year and a half from 18 to 100, just call it that. You're moving up 500% over an 18-month period. And we know it's even more than that. Since the election is this little spike here. I, of course, sense that this particular stock is going in, which this particular cryptocurrency is going to go much higher. So I won't take credit for this, but I've been a big believer, as you all know, of the Bitcoin product as Bitcoin itself, not Ethereum or any of the others. And you can evidence that with a quick look at Ethereum. Does this chart look anything like this chart? And a matter of fact, if I wanted to show you it in a different way, I could put that one to Ethereum so you can see the difference. And you'll find it is stark. So do you want to own Bitcoin, which is up 136%, or do you want to own Ethereum that's up 46% over this huge period of time? In other words, you can see what's happening. There's a divergence occurring. It's probably an arbitrage now. You want to buy Bitcoin and sell Ethereum. I don't see the future in them. I understand there's a lot of people that believe in owning a bunch of these things, but I think that day is past, and that's my opinion. And I feel that if I'm going to make money and owning these things, I'm going to own the Cadillac, like I've said, for at least a year, and that's Bitcoin. And you can just see it in a relative look that Ethereum is not performing as well as Bitcoin, and it's just plain as day. Matter of fact, Bitcoin oftentimes I'm finding out goes up and Ethereum goes down. That is a massive change. They're not even, they're correlated, but the correlation is becoming lower and lower. So that is a concern for any owner of Ethereum, given the fact we already know that Bitcoin is a huge winner. Hey, I want to mention one last thing. Another kind of stock that we've been following, of course, is this one. I'm going to just type it in. Do I have it handy real quick? And then we'll go, Aaron. Here it is. It's Fannie Mae. So everybody, I can get rid of the Bitcoin chart, sorry. The Fannie Mae, as you can tell, has gone from the beginning of the end of December from $2.50 a share all the way up to $6 a share. It's gone up about 250 to about 175%, just literally over the last month. But since the election, it was $1.36 a share. Trump wins the election, and it goes up to $6.86, which is a 500% return. Why? What is Fannie Mae? You know what it is. Fannie Mae is the lender. Basically, Fannie Mae and Freddie and Sally, they're the companies they call their government-owned entities, which are effectively owners own stocks. They're publicly owned stocks, but they're run essentially by the government. They act as the conduit so that when you get a loan or someone gets a mortgage from a bank, that bank will sell it to Fannie, Freddie, Sally, and for various reasons, various programs. Why have they gone up? Here's why. You can tell there's an effect that is likely to occur where the housing problems in this country will be solved in some way through these government-owned entities. And that means that there will be funding through these entities that will allow them to offer different kinds of loans to help spur new home buying and construction. What's going on here is a play between the government and private industry at some level to be able to help people own homes. That's one aspect. That's the aspect that I take out of it. There are others, but we do have some of these things also will be embedded in some of the portfolios to come. I think these things also have more room to go. That being said, I probably created a lot of questions, and if I didn't, I'll answer the few that are there. So, Aaron? Oh, I froze.
Yeah, Kelly, the first thing I'm going to ask you to do is try to get your camera back online.
Yep, I'm sorry.
You're in a very flattering pose, mind you. You're looking off to the side.
Yeah, that's the one I always have, right?
And if not, it's okay. We had your mic. No big deal. Sometimes stuff happens when you're doing things live. If you need a minute, I will take over and just to get everyone situated and familiarized with how Q&A works, just in case this is your first time joining us for the iFlip AI Circle. Okay, so we're typing your questions now. We're going to spend the next 5 to 7 minutes with Kelly answering your questions live. I'm going to do some of the app-specific questions I will take on. Now, at the end of which, Kelly's going to pick the best question of the evening, and that person is going to receive a $25 Amazon gift card via email. Now, what other ways do you need to qualify? It's not enough that you just get picked as the best question. You also need to own at least one iFlip Smartfolio in order to qualify for the gift card. How do you prove that? You either email us a screenshot or your account number to mailbag@iflipinvest.com. Okay. So Kelly, I see you're back. Nice.
Yes, I'm here. Let's go for some quick Q&A.
Okay, so let's get your chart out of the way here. All right. First question is this isn't a question, but I just want a quick shout out to Debbie, who is joining us from snowy Florida. Record levels of snow over in Florida. Hope you're safe and stay warm out there. Okay. Anyway, this first question I think is more for me. I'm more the product guy here. What times of day should we not log in to see account status? It seems that the system updates in the evenings. Just wondering when that window of the time is. So when the stock market is closed, which is after 4 p.m. Eastern time, is when my team does a lot of updates, hot fixes, and whatever to optimize the app. So you might see some stuff after hours. Ideally, you would pay attention during market hours, hopefully. Okay, next question I think is for you, Kelly. SPY, Triple Q, and crypto all moving up. When do you think the market will hit the brakes?
Well, good market question. We all would like to know that and have our crystal ball. I do feel that anytime you see these kind of bump ups in price based on the enthusiasm of some kind of an event that that allows people to feel more optimistic, like in this case, it's an election. I would be very wary of hitting any breaks in the first 100 days. As we already saw in the first 2 days, Trump is now bringing on people literally to TV to say they're going to make a big investment in the country. This person will make a big investment in the country. I suspect he'll be doing this for the next 100 days. Again, he's the first real businessman that has ever been in the office, and he's looking to make money like he would for a company. And America, of course, is in a unique position to do that, given the overall clout the country has again vis-a-vis the world over other countries. It could be abused. That's a concern, of course, but that doesn't mean that when we start to create investment, that it will continue to create more and more momentum as more and more people come out of the woodwork saying they will do this and they will do that and add investment to this country. Don't be surprised to see new plants being built and car companies coming over, other technology companies as well. America's companies bringing back manufacturing things to the country as well, because we know that that's another thing that he wants. So for the first 100 days, no, I would never, I'm not taking a short position in this market, no matter where it is, in the next 100 days. Beyond that, my crystal ball doesn't go too much further. And so, but given the level of optimism here, I can't be a contrarian, at least for the next 100 days.
Sounds good. Thank you, Kelly. I think the next question I think I can answer, because it's app related. When will tax documents available? They'll be available in your documents section of the app as the broker releases. We don't mess. We're a software company. We don't mess with tax stuff. That comes directly from Apex. And so when they make it available, which is usually around February, is when most brokers do that. If I'm not
end of January, February. Yep.
That it'll be available to you on the document section of the app. Okay. Yep. Next question is I think this one's for you, Kelly. In what ways does iFlip's AI differentiate itself from other algorithmic trading platforms, and how do you measure its long-term success?
Okay, good question there, David. The way first of all, we differentiate the AI different from other algorithmic trading platforms is they're algorithmic trading platforms as opposed to machine learning platforms. So the way I would differentiate it is this: I believe there's other platforms out there, and you've seen them, Thinkorswim or TradeStation. There's Wealth Lab. There's so many products out there that offer an algorithmic solution to trading and investing. What we do is we also use algorithms to be able to allow us to manage the risk of our of symbols inside of a portfolio, but we also apply machine learning to individual symbols, as well as the S&P 500 itself through the spider. And we try to see if the AI can help our algorithms by exiting our trades a little sooner. So in general, we want to be long the market. We want to be in the trade. We want to own stocks. However, there are times we have to get out. One reason, of course, is because we have some kind of stop loss that exists based on volatility. That's an algorithm. But the differentiation is very stark. While there are a lot of times that you might want to get out of a stock even before an algorithm says you should do that. And how can we do that with some kind of science? Machine learning answers that question. Machine learning looks at different kinds of information to help say, should we be in or out of the market? By the way, it also looks at the algorithm itself. So I would say the best differentiation, and I can tell you for certain, the best differentiation is we are actually layering machine learning on top of an algorithm to help exit all of our trades. It's mostly to exit. So keep that in mind. It does more than that, but it is actual machine learning as applied to a symbol. And it's very distinctively different than an algorithm, which is just a set of rules.
Yeah, whenever I get asked this question, I like to say in layman's terms, it actually uses intelligence, whereas other algorithmic platforms will just, anytime a condition is met, it's just going to 100%
do it
as a trigger. But we use intelligence and to contextualize it and decide, well, does it make sense to actually pull the trigger on this right now, even though the conditions are met? And that layer of extra intelligence is where is the major difference. I am jumping around a little bit. I'm grouping like questions in case I'm not skipping you guys. Okay, so just we'll get to it. We'll get to it. Another question that was related to this, maybe you can just
I think I saw it.
Piggyback off of this one. I have to scroll
down. Is it can you explain the details and how AI is used in the stock picks and on how much to invest? It just moved how much to invest in when to get in and out of each stock.
Right.
Well, first of all, the AI, I think I explained the second part of that question. How much is done differently? How much is done by a solver. So when I create a portfolio in the beginning, I go equal weighting because we have no other information. However, as time goes on, say quarterly information goes on, what you can do then is you can tweak that by finding out, hey, what is the most optimal pattern based on for example, the last 90 days to say what should be the allocations that we should have for the next 90 days. Well, there's two elements of that. The first element is to say what was the best way, the best allocations to use historically for the last 90 days. Then we would have done obviously a little better because you already know the information. But you can take that same information and forecast how you would expect that to do on the same stocks over the next 90 days. So that is what's happening behind the scenes. And that is actually built into the way we use AI because it's part of the AI platform. There's a solver back there. By the way, those solvers you can find on the internet in an Excel spreadsheet if you Google enough. And you'll see there's a complexity to it, but it's pretty easy and pretty straightforward math. The other part of that question was the stock picks. So we have some products like 4Q Rotate that stock pick based on a science. It's not an AI, it's an algorithmic science that says, hey, we should pick these stocks. But then if we pick those stocks, that's when you then apply, hey, will an algorithm work on those particular stocks? If the algorithm works, do we have data to apply AI on those stocks? And then we can build a portfolio that way. So there's a lot in new construction. That being said, I can tell you that the Vector Plus, the red oil, are portfolios that were not done for that reason. And there was no science like that. Those are done because we see the realities of the world. When oil prices went negative during COVID, if you guys remember that, why not? It's a no-brainer, I feel, to build a portfolio that owns oil. Oil will not be negative. So we should own it. I don't think anybody would argue with me on that. It's not like something is worth 70, it goes to zero or even minus 10 and it's going to stay there. Something is wrong. There's a dislocation. You want to buy it.
Yeah.
That's number one. Number two is that even if you see that, the Vector portfolio that we just built is something based on, we have a new administration with totally new sets of goals. Total goals, by the way, that are literally the antithesis of what was done the last 4 years, was literally wiped out in 2 hours on Monday. And we found a new direction. Those directions we've heard before Trump won the presidency, we heard what he wanted to do. Those stocks in there are representations of what he wanted to do. The good news is we already owned a lot of the stocks of the things he wanted to do, but we did have to add more. That's not science. That's just mindfulness. That's someone just knowing the market. But that being said, you still have to apply science on top of it because after all, that's what our company is. It's not, Kelly picking stocks. Because if it was, you shouldn't be here.
Yeah, that's actually.
I would like to think you should be here, but regardless, you shouldn't. The real reason to be here at Flip is to take advantage of not just someone like me putting together ideas for people to discern for themselves, but for ideas where once they're discerned, that there's some kind of science behind it to manage the risk that you would have owning them. After all, anybody can be wrong, including me. And that is I think, a double advantage of Flip. We use science, but we also use, I don't want this to be a cliche, we do use common sense.
That's actually a really good segue. Since we're on the topic of Vector Plus, we had a couple of questions that were about that. Is the Vector Plus managed like conservative, where the AI will move out of investments heading down and stay on the side until going back up? And is there overlap between Vector and balanced and aggressive?
Yes, there is. Here's the overlap. Again, back during COVID, when I built the conservative, it was in red oil. Well, conservative, sorry, let me take that back. Conservative was built in 2023, but conservative is a portfolio that is focused on dividends. Dividends were stocks like All Plains American and Energy Transfer, the actually stocks that I just mentioned in the market recap. Those are stocks that were paying 7 and 8 and 9% at the time after COVID, and they were priced at $7, $8 a share. Now they are $21 a share, and they are now paying only like 7% dividends. So yes, there's overlap. If you have good stocks and you owned Vector Plus and you owned conservative and or red oil, you would be overlapping a lot of those stocks. But that's fine because they're there for different reasons. I could own, for example, All Plains American and Energy Transfer because I think they're going to go from now $21 a share, possibly to $26. That's $5. That's another 25%. But the other reason I want to own it is because it'll pay me 7% along the way. Well, that means it belongs in the conservative portfolio. And by the way, it's an oil product. That means it should probably be along in the oil portfolio. So if you owned all three, yeah, you'd have large allocations to those stocks, but you would own the allocations that you would have are there for different reasons. One's to collect income and the other one is to increase in price appreciation. So bottom line is, yeah, you would own more. And that goes to other philosophies that I have that we can go over at some point on some special review, which means I believe also that myopic portfolios that have maybe 10 things, 20 things at the most, are the best way to go. Never have a portfolio with things that are like 50 different stocks. That's ridiculous.
Yeah.
All things, there's a thing in statistics, everyone, you should know, something called a degree of freedom. And that means if you have enough degrees of freedom, and by the way, the number is about 6, then you're already diversified. So assuming you're in different sectors, but if you even just 6 stocks will do it. So keep in mind, we're applying mathematics to it. We're changing the underlying behavior anyway. So some of that conversation may go over some people. That's fine. But just note, if you really want to make money, you really have to have sizable positions in something that you have conviction in. And the fact that they exist in all those portfolios means there's conviction.
Okay, the last couple of questions are just kind of housekeeping questions that I'll take on. So will there be 2 tax documents, one from Velox, one from Apex? Yes, there will be. If this applies to you, you know who you are because you were with us for a while. Right. When Velox releases their statements, it should be in the documents section, or they might end up mailing it to you because you're no longer with them. I'm not sure. That's a Velox question. You'd have to ask them. But the Apex one will definitely be there. Yes. Is there a timeline for when the graphing function will be corrected to show accurately recorded gains? Now, this is a product question. I could go in depth on this, but I don't have the time for that. The short answer is we are working on it, but there is a lot of complicated math that you have to do, especially since we migrated brokers. It's there, and the history didn't come with it. So there's a lot of stuff that my team and I we're juggling a lot of things in the air right now to give you the best app experience as possible. The only thing I can really promise you right now is from the moment you move to Apex going forward, you won't have any problems. It's all the historical stuff where the history didn't get transferred fully is where the problem is. Okay. All right. Now, okay, I think that's it.
I'll give the winner on the question, and I want to answer one more. The winner should be David Tucker. Any question that is asking how the differentiation of AI from other algorithmic trading platforms, that is a very appropriate question in this forum. It is called the AI Circle, after all, and I'm the guy that is behind the algorithms and also most of the AI. Although we now have a new guy that's he makes me feel deeply inferior. But it also tells me how much more we always have to learn. I am no Sam Altman, but I can tell you this, I do understand how it works. I am self-taught in machine learning. I have no degree in it, but it was something that has to come. So it is something you learn because you have a good understanding of math. Kind of makes sense when you get into it. So he's the winner. And I want to answer the question right below it by A.O. French, which was, if the housing sector is on an increase, will the Fed change rates? I think the Federal Reserve will not change rates. And if they do, they will reluctantly change rates lower, maybe one more time sometime this year. Now, that being said, politically, Donald Trump wants much lower rates. And the branch of the Federal Reserve and the presidency are not supposed to be connected. He technically should not fire the Fed chief, and he should be independent. But that doesn't mean he can't put a lot of pressure on Mr. Powell to say, let's lower the rates. And honestly, I don't think it has so much to do with the housing sector. That's why I brought up the information on Fannie Mae. I think the government, the fiscal side, Congress itself, is going to try to work through its agencies to be able to help builders build houses and make it more attractive to them, even if interest rates stay right where they're at. So that's a very deep question. It requires, it's a political question almost. But that's my take. I see one more rate cut, maybe sometime in March, and then silence after that.
Yeah, he's made it no secret, even in his first administration, that he loves low rates. And so
don't we all?
Well, yeah, exactly.
We all do, unless we're 65 or greater. And when we're 65 or greater, we want high rates because now I can invest. I'm on fixed income. I can invest my money and get a high rate with no risk, right? So that has been the problem of very, very low rates for so long. It has penalized the older generation to say, hey, they're on fixed income. They can't take the risk of the stock market. They're forced into the stock market. The good news is it's done well. But things happen. And trade and tariffs are on the horizon. Tariffs affect the price of stocks. Yeah. So we will see. We will see, everyone. Thank you, everyone.
Yeah. So once again, David Tucker, you are our winner tonight. Congratulations. Hopefully you actually own a Smartfolio. If you don't, get on the app, make your initial deposit, get into a Smartfolio, email mailbag@iflipinvest.com to qualify and earn your winnings. That'll do it for this episode of the AI Circle. I know we went a little bit over today, but you had such great questions. So I hope everybody had a great time. Okay. We'll see you in 2 weeks. And until then, goodbye, everyone.
Take care. All the very best. See you in 2 weeks.